The accounting equation, also known as the balance sheet equation, is the relationship between assets, liabilities, and equity of the business. The double entry bookkeeping system is the foundation for the equation, ensuring that the equation remains balanced with assets being equal to the sum of liabilities and equity.
On the left-hand side of the equation, you have assets. Assets are defined as a resource that are owned by a company that have an economic value. Assets are used to generate revenue or have the potential to generate revenue in the future. There are many types of assets, such as cash, accounts receivables, inventory, and fixed assets like property, plant, and equipment.
On the right-hand side, there are two terms. The first is liabilities. Liabilities are made up of suppliers' obligations and debt. The most common example is accounts payable, which are items purchased on credit from suppliers. Other examples are interest payable, loans payable, wage payable, and income tax payable. Liabilities can be thought of as a source of a company's assets, as you need to have or borrow money to make money.
The other term is shareholders' equity. Shareholders' equity is a measure of a company's net worth and is calculated by subtracting liabilities from assets. Shareholders' equity is obtained from two sources. The first source is money that was originally invested in the company, as well as later investments. The second source is from retained earnings. Retained earnings are derived from profits reinvested in the business and not distributed to shareholders in the form of dividends. It can also be used to pay off debts. Shareholders' equity can also be calculated by subtracting the value of treasury shares from a company's share capital and retained earnings.
An example of how the accounting equation works is as follows. If your business buys inventory from a supplier on credit, your assets will increase because inventory is an asset to your business. At the same time, your accounts payable will also increase because you now owe your suppliers money for the purchases you made. As you can see, the equation remains in balance because the changes made on one side equal the changes on the other. As we said at the start of this video, the accounting equation is a simple representation of a company's balance sheet, so you would also be able to notice the exact same changes if you were watching your balance sheet throughout these transactions.
Created using Powtoon.